Hi there, welcome to another weekly bulletin. I'm Sharad over here, and we've been doing this weekly bulletin wherein we understand what happened in the market, what's the market sentiment, and then based upon what the fundamentals are and the sentiments are, we make decisions for both investment and trade. I'm supported by my analyst Aman, and this is primarily an educational channel wherein whatever we understand, we share it, and that's what this is. It's not an advice for investment, and I love the numbers. That's why this session. This is going to be quick 10 minutes wrap of what the third week of May look like and what to anticipate in the coming week. And as usual, we start with what happened during the week. So Nifty uh, did bounce back from earlier declines, and it closed at 2.03% up, closed about 22,500, which is a very good sign with 45 advances and 5 declines. Mid cap also showing positivity with 4.88% to close at 14,588. But the worrying sign or the very clear indication is that at least for now, FIs are moving away from the market. So this is almost fifth or sixth week of continuous selling by FIs, where they were the net sellers of 10,649 CR and DI is bought for 14,410 CR. Now, this to a certain extent also indicates that most of the market today is dominant by the local players, and that's why even though there is net selling by FIs on a continuous basis and the money is moving to other markets, the Indian market continues to show strength. But if I compare the market with the rest of the emerging markets, then definitely Nifty has not been the best performer, at least for the last few weeks. In terms of the top sectors in focus, metals up by a whopping 7.03%, which also saw a significant beating when the markets were going down below 22,000. Infra up by 4.51, energy up by 3.44, and FMCG down by 0.11. So that was Nifty in a very short view. And now every week, as this is about both fundamentals and sentiments, this is exactly what has happened. This is pure facts. From a sentiment perspective, we always start with a quote from somebody who's been an established investor, and this is from Alexander Elder. His quote indicates the goal of a successful trader is to make the best trade. Money is secondary. This is like any other fundamental aspect of uh, profession, that you participate in the profession with sincerity and 100% conviction, and let the money or the outcome be based on that. So that's exactly what he's trying to indicate, that don't try to optimize your trades for money, optimize the trades for your framework, whatever framework you put in place from a decision making perspective, and then the money will come. Because if you're able to follow the framework in a disciplined manner, then that's what you'll be able to get the good trades, and finally the money will be a good outcome. So that's what it indicates and what we are interpreting from this. Now, from the news, other than this, the news from this week was about the fact that both the US India inflation data was slightly on the positive side. US indicated control on inflation for the month of April from 3.5% to 3.4%, which definitely resulted in a lot of positivity in the US markets, because the Fed has indicated that if they're not able to control inflation, then to the extent they'll have to induce a recession. So this definitely does indicate a positive direction. And from India perspective also, the inflation was down marginally from 4.85 to 4.83%. So what the markets are anticipating is that there would be a rate cut, and because of that, there is a positivity in the market. Now, the second thing that was also there in the system was the fact that Nestle shareholders voted to reject a royalty hike proposal to the parent company, which resulted in the stock price. So this is one of the news that did come across on the stock markets. And obviously, there is the Lok Sabha election volatility that is there in the index. and because of this, it will continue to remain till 4th of June or maybe till 10th June. So the investor as well as the trader is expected to have a lot of caution in what you are investing in. So that was the news this week. Now, has been also the result season. So we cover a few quarterly results. So let's look at some of the primary ones that came this week. The first one being the Colgate Palmolive, with revenue up by a good 10.3% and net profit up by 20.11% year on year. But the operating margin also improved from 20% to 32.9. So, however, the markets have not received this very positively because there is a weak forecast for FY25 and the overall stock took a dip of 5%. So, given the fact that there is weakness in the stock at this point in time, and the commentary from the market is also from the management is also not very strong, we are recommending a sell on this stock. So that's Colgate uh, results. Now, the next one was Airtel. Airtel showed a revenue growth of 4.4%, net profit down by 31.06% because of reduced operating margins, and that resulted in stock did not affect that much. But the good part is that the average revenue per user has increased from 193 to 209, which is a good sign. And the other thing which we need to account for in this particular sector is that Airtel is one of the major players in the telecom sector. And currently, because of very tight control by the government and stiff competition from Jio, the prices are under control. But the kind of market segment that Airtel is developing, there is a lot of anticipation that once the price movement starts going up, Airtel would be significantly profitable, and it is also expected to benefit a lot from data center boom. That is why, even though the results were not so much positive in terms of the numbers, other than the ARPU, the stock price did go up by 2%. And the other part of the fact being that the India segment, which is the primary focus for this particular stock, is gone up by 12%, 12.1%. So overall, the stock has done well, and there is a very strong momentum that is developing. Especially, there is a lot of anticipation from price hike. So we maintain a buy rating for both short-term and long-term investors in this particular stock. The third one being the Mahindra and Mahindra results with 11% growth in revenue and a whooping 32% growth in net profit. A final dividend of 21 announced. The tractor was slightly negative. There was a decline in that, which causes a little bit concern because at some time Mahindra was primarily a agriculture and the farming automobile company, although now it is more of a passenger car company. And the profits did beat the estimates by a significant 25% kind of a thing because by 10%, sorry. The market was anticipating 1800 CR, but it generated 2038. Uh, there is also a very positive guidance from the management. So the stock price did jump by 9%. And that is why what we are saying is that for a long-term investor, we should continue to hold, but somebody who is holding the stock from a very short-term perspective can book the profits at this point in time, at least a part of it. So that was Mahindra and Mahindra. And with that, we come to the conclusion of the results part of it. And we move into the last part of our weekly bulletin, that is identifying the momentum stocks. Now, for momentum stocks, we run an algorithm which works on a daily basis as well as on the weekly basis. And the stocks that we're going to make recommendations are which have shown very clear attributes of strong momentum. And these are stocks which are fundamentally strong. Then only we have brought them into momentum stocks. So How do we do that? First is that we've taken 150 stocks which are fundamentally strong, which means that these are companies which have shown very strong profit growths. Their typically PEG ratios are reasonably good. Price to book is well under control. That's how this list has been created. Then we figure out whether the price momentum is indicating a clear uh, trend in which over week by week, if we look at it, the stock is taking support at higher levels. Because every time a stock movement happens, it always happens in, you know, peaks and troughs. But whenever the trough comes, it is always turning back to a peak from a level which was higher than the previous trough. So it is taking support at higher lows. That is one of the key criteria. Then whenever the stock is moving up, we're seeing good volumes on these stocks. The current price is higher than 13-day EMA and the 13-day EMA is higher than 50-day EMA. Based on this, when we have taken 150 stocks, we got around 10 to 12 stocks. And the ones that we are recommending to take a bet upon is Escorts, TVS Holding, SMC Global, and Polycab. But the stocks put together, if I really look at it, these are the stocks that showed strength. We run this. So this one was from the pharmacy sector, and it has shown twice. That is made into our list at 5,114 and 5,462. Now we've taken Cummins India, we had recommended last time, and it has come at least 4 times in our trend. Similarly, like although we have now taken a bet on Polycab, and Polycab also has come on our list at least 5 or 6 times. And we started coming at 5,300 and today it is at 6,493. So whenever we look at a particular stock, we look at from all angles that it's Polycab. When it says buy not a condition, it is on a daily basis, not on a weekly basis. On a weekly basis, the fact that this is a weekly recommendation, that's why it is. And then we look at how have been the results, and then when all it has shown the strength in terms of weekly level supports. And then there is also the support that we look at daily levels. So that is how Polycab has made it into the list. Uh, SMC Global has definitely been there. It has started on our list from 147. Today it is at 168. So based on this, we do another round of analysis and then try to identify risk and reward. And based on that, these are the four that are coming, but there is a broader set that is still available to take our bets on. Uh, with that, we conclude. Stay invested, look at numbers with conviction, and make investments to get the best rates. I'll see you in the next one, wherein we'll cover a similar story for the next week. Bye for now.